Hello and welcome to Core Finance CEO Interviews. Our very interesting guest today is Nemaska Lithium. They have one of the world's largest lithium deposits and high grade. They recently just raised $1.1 billion, which is quite a feat in this market. Here to tell us about the project and the company is Wanda Cutler, Manager Investor Relations. Hello, Wanda. Thank you for joining us.
Hi, Bonnie. Thanks for having me.
So that is quite an amazing thing to raise $1.1 billion in this market. Now, is that debt? Is that equity? Is that offtake?
So it breaks down. We tapped a number of financial tools in order to pull in the full 1.1 billion. So we did an equity investment, which consisted of about 454 million Canadian, and that was a $280 million bought deal, which was led by Bank of Montreal as well as National Bank. We also brought in SoftBank out of Japan. They purchased 9.9% of the company for roughly 94 million. And then the government of Quebec, through Resources Quebec, invested 80 million. So that was the equity component. As for the debt, we went and did a corporate bond. So we looked at, we raised 350 million US in the corporate bonds. And then we did a stream with Orion Mine Finance for 150 million US. And altogether that sort of totaled 1.1 billion Canadian for our project financing.
And so is the interest in the project mainly because you're going to be ultimately the lowest cost producer of a hydroxide, lithium hydroxide?
Yeah, so our project is in, there's a number of things that make our project interesting. First of all, we're in Quebec, which is a very safe jurisdiction. So from a jurisdiction perspective, I think people find the risk Quebec is a low-risk jurisdiction, so and very mining-friendly, as we all know. We're also vertically integrated, which means we're going to be going from the mine all the way through to the chemical plant. That gives us a very compelling cost advantage on our hydroxide as well as our carbonate. Based on our feasibility study that was put out in January of this year, we are projecting to be the lowest cost producer of lithium hydroxide in the world, and that will be at brines as well as other hard rock projects. So it puts us in a very good position in a market which is experiencing a lot of growth. Also, the fact that we're looking at hydroxide as opposed to carbonate. Hydroxide, a lot of the new battery chemistries are using hydroxide now. As you move to higher nickel content in these battery chemistries on the cathode side, it absolutely requires hydroxide. And so from Nemaska's perspective, we have a process that allows us to go from concentrate directly to hydroxide.
Oh, thank you. That's very helpful because a lot of investors probably wouldn't understand the difference between a hydroxide and a carbonate. So that's really helpful, especially for investors. If they're going to be investing in a lithium company, they should really understand the difference.
Absolutely, absolutely. And a lot of companies will talk about lithium carbonate equivalent. And they will discuss their concentrate on a lithium carbonate equivalent basis. But the reality is, if you're using a lithium ion battery, you need lithium chemicals. And those chemicals are either hydroxide or carbonate. And as I said, we're seeing the new battery chemistries moving to hydroxide.
And I also understand that you have some offtake agreements for most of your production.
We do. So we've signed an offtake agreement with FMC, which is a very large existing battery chemical producer. We have an offtake agreement with Johnson Matthey. Johnson Matthey has a cathode facility in Quebec, Canada, so they're very close, and so we can supply them quite easily. We also have signed a letter of intent with Northvolt, and Northvolt is a Swedish gigafactory that's currently under construction. That is not a binding take or pay agreement yet, but we expect it to convert to a binding agreement shortly. And then finally, with the SoftBank investment, as long as they maintain 9.9% ownership, they have the right to purchase up to 20%. So a right of first offer on 20%. Of our products. So all in, that brings us close to, I believe it's 75% sold.
That's excellent. And you have a bankable feasibility on the project, obviously, to get this debt finance.
Yep.
Can you give us some idea of the economics of the project?
Sure. So the NPV on the project after tax, taking into account our the financing structure that we just did. So the feasibility study originally, when it was produced, had really just looked at equity, as so it was 100% financed by equity. Obviously, we did debt, we did stream, and we did equity as well. So our NPV now at an 8% discount is 2.2 billion Canadian. And our IRR is over 50%. We've got a 2-year payback on the capital, and we have a 33-year mine life.
Wow, that's incredible. And what are you looking at annual production to be?
Our annual production will be about 33,000 tons of lithium carbonate equivalent. Most of our production is going to be hydroxide, though we will do some carbonate. So that's about 23,000 tons hydroxide, 11,000 tons carbonate. And then we're going to be doing, that's based on mining about 213,000 tons of concentrate. So producing 213,000 tons of concentrate, shipping that down to our facility in Shawinigan and converting that into battery chemicals.
And so have you started the construction phase of the mine and the plant yet?
Yeah, we're fairly advanced. So we have a 12 to 15 month production schedule for the mine because the mine is actually fairly advanced. So the administrative offices are in, the concentrator building is up, the access roads are in, the hydro line is about to be hooked up. So from a mine perspective, we're fairly well along. We expect to be producing concentrate out of the mine by about Q3 of 2019, with a goal of actually selling about a year's worth of concentrate in 2019, at the end of 2019. Because the chemical plant is a 24-month construction schedule. And so we have about a year there where we'll have concentrate, which is a sellable product, so you can sell it to the Chinese, and we have signed an offtake agreement for about 1 year's supply of concentrate to the Chinese. And then the construction schedule on the chemical plant is 24 months. So as the chemical plant gets up and running, then we'll taper off our contract for our concentrate sales and actually start supplying the chemical plant with concentrate and then converting that over into battery chemicals.
I guess the strategy with that idea is that you will start producing cash flow as soon as possible.
So we'll be cash flowing by the end of 2019 going into 2020.
And so that will reduce your having to tap the equity market again after the raise that you've just done.
Absolutely. And so in the project financing that we just did, I mean, our capex on our project's 800 million Canadian. We raised 1.1 billion. So part of that was we raised about 2 years worth of interest payments. We raised about $87 million worth of working capital, and then we also raised some contingencies, so overage, about $40 million worth of cost overrun, and that sits in a separate account. So really, we're well financed. We don't anticipate having to go back to the market for equity.
That's amazing. And it's quite amazing from where you have come from, because you've been with the project from the beginning.
Yeah.
And back in 2012, when I was helping to raise some funds for the company in London, your stock was about 12 cents and your market cap was what, 20 million?
Yeah. Yeah. So now our market cap we're around 750 million Canadian. And I do believe that now that the financing risk is off, it's really the only risk that's left, our execution risk. And we have done a lot of work to mitigate that risk. So we did do a bulk sample up at the mine site. So we took a 10,000 ton bulk sample and produced 1,100 tons worth of concentrate. So we have very good visibility into what it's going to take to mine this project based on that fairly large bulk sample. And then we built a phase 1 plant in Shawinigan, which is a demonstration facility, and that's been running for a year. So our people are trained on the equipment, and as well all the learnings that we've had from that year of operation has gone into the design of the commercial chemical plant.
That was a very smart move to do that in order to work out all of the kinks that go into mining and operating.
Absolutely. The other thing that it also does is it allows us to qualify our product. So in lithium, you have to qualify your battery chemicals with your end users. So this will allow us to qualify with our existing off-takers as well as other potential customers by sending out samples from the phase 1 plant. So they can start receiving our material and qualifying it and qualifying us as a new supplier.
Well, thank you so much for joining us, Wanda. This is a very exciting project, and we look forward to your progress, your production, and the construction phase completion. Thank you, and please join us again. Thank you, everyone, for joining us on Core Finance CEO Interviews. Have a very profitable day.